In this session, we will be focusing on a brand new chapter. We would be learning hire purchase and installment system. This is quite a big chapter, and we will be approaching it in two parts. First part, we will be learning hire purchase. In the second part, we will be discussing what is meant by installment. We all are familiar with transactions. We would walk into a shop, we would pick up the things that we want, we would go to the cash counter, we would make a payment, and effectively the product becomes our property. Whenever we talk about a sale or a purchase, whenever we talk about a sale or a purchase, there are essentially two important aspects which are involved in this. Whenever we talk about a sale or a purchase, there are two important aspects. First is that there should be a seller, someone who's willing to transact, someone who's got a product, someone who's got a service, and who's willing to give that up. Okay? That person is referred to as a seller. Then you have a buyer. So buyer is a person who has the purchasing capacity, he has the purchasing power, and he's willing to acquire. Okay, so that person is referred to as the buyer. So the interaction between these two categories of people is what you typically call as a sale or a purchase. Okay, these two categories of people will be coming together, they would be interacting, and based on this interaction is that we would be having a sale or a purchase. So this is typically how a sale or a purchase takes place. Whenever we talk about a sale or purchase, there are two important aspects which are coming into picture. One is ownership. Second is possession. Okay. So one is ownership. The second is possession. Ownership refers to the legal title. It talks about the legal title. Okay. So it talks about the legal title. When we talk about possession, we are talking about right to use. Okay. We're talking about right to use. So when we talk about a sale or a purchase, what you have to remember is it is the exchange of two important aspects. There is exchange of ownership, there is exchange of possession. Let me try and explain this to you with another example. Imagine you get onto Amazon, you decide to buy a brand new mobile phone. You picked up the mobile phone that you like, you added that to your cart, you made it, you processed the payment. After you process the payment, you get an email from Amazon stating that for the product to be delivered to you, it will take 15 days. For the product to be delivered to you, it will take at least 15. So what has essentially happened in that transaction is this: you have got the ownership, okay? However, you have not got the possession. Okay? The ownership of the product is yours. The moment you made the payment, the ownership has been transferred from Amazon to you. But have you gained possession? You have not gained possession. You will gain possession after 15 days once the product gets delivered to you. Just because you have carried out a sale or a purchase, that does not mean that you have the possession of the product. It would also not necessarily mean that you will also have ownership. Let's talk about taking a house on rent. When you take a house on rent, please remember the landlord is transferring only the possession right. He's only transferring possession from his hand to you. Ownership is still with the landlord. Okay? So when you take a house on rent, what is happening over there is that the ownership would be retained with the owner, the landlord, and the possession is transferred from the landlord to the tenant. So this is typically how any sale or a purchase transaction would take place. Typically any sale or a purchase transaction, please remember there are two essential parts which are getting transferred, which are getting exchanged. One is ownership and the other is possession. So only if these two are executed, or only if these two, you can call or you can refer to that as a sale or a purchase. Okay, only then you can refer to that as a sale or a purchase. So without that, it is not possible for you to refer to that as a sale or a purchase. Okay. So this is typically what happens in the case of a sale or a purchase. Both ownership and the possession must be transferred. Okay. Both the possession and the ownership, they both should be transferred. That is when you would refer to that as a sale or a purchase. So I hope this part is clear to all of you right now. whenever you talk about a sale or a purchase, essentially there are two things which are getting transacted. You're getting the ownership and you're also getting the possession. Both these have to be exchanged, and that is when you would be calling that as a sale. Now we are talking about hire purchase. In hire purchase, this is the method of purchasing or selling. Now, one of the important features of hire purchase is this. In hire purchase, what would happen is the payment would be made in parts. If the payment of the product would be made in parts, payment of the product would not happen in one go, or it would not happen in lump sum. It would not be paid in one shot. Here, what would happen is the payment would be made from the buyer to the seller, and from the seller to the buyer, sorry. And then what will happen is the payment would be made in parts. Okay? The payment would be made in parts, and that is what is referred to as a hire purchase. Now, in hire purchase, another important aspect is this: the ownership of the product will remain with the seller. The ownership of the product will remain with the seller until the complete payment is made. Okay, until the complete payment is made, the ownership would remain with the seller. So the ownership would be transferred from the seller to the buyer only when the complete payment is made. Okay, so only when the complete payment is made, that is when the ownership would be getting transferred from the buyer to the seller. Okay, so here, please remember, there are two important aspects. Here, payment is made in parts. The ownership would remain with the seller. Ownership would be transferred from the seller to the buyer only when the complete payment is made. Another important aspect that you have to remember about the hire purchase is this: if the buyer defaults the payment, the seller can take back the good. Okay, if the buyer defaults the payment, what will happen is the seller can take back the good. Now, why is it that the seller can take back the good? Please remember, ownership of the product is with the seller, not with the buyer. Okay? So the buyer, since the ownership of the product is not with the buyer, it's still with the seller, he can take back the product. Okay? He can take back the product if he defaults the payment. Okay? So remember, in hire purchase, the payment is made in parts. Ownership remains with the seller. Ownership gets transferred when the complete payment is made. If the buyer defaults the payment, the seller can take back the goods. Okay, now we will be talking about the features of hire purchase. Okay, now for hire purchase to happen, it has to be between two categories of people. You have a buyer and you have a seller. Now, in the case of hire purchase, the seller is referred to as the hire vendor. In hire purchase, the seller is referred to as the hire vendor. The buyer in hire purchase is referred to as hire purchaser. The buyer in hire purchase is referred to as the hire purchaser. Now, one important aspect you have to remember is, in the case of hire purchase, the payment is not done in lump sum. The payment is done in parts. It is done in pieces. It's done in a piece. Now, the ownership of the product would remain with the seller until the complete payment is made. So until the last part payment is made by the purchaser, the ownership of those products will continue to remain with the seller. Now, what happens if at all the owner defaults, the buyer defaults, the purchaser defaults the payment? If at all the purchaser defaults the payment, the buyer can take back, the vendor can take back the product. Why? Because the ownership is still with the seller. That's the reason why he can take the product back. So these are the features of the hire purchase. Okay? These are the features of hire purchase. So here we will be discussing the differences between sale and purchase. How is the sale different from a hire purchase? The first difference is in terms of payment. So in the case of sale, what happens is the payment is made in lump sum. You would go about with the processing the payment in one shot. Here, you do not have an option of breaking down the payment into parts. You will have to complete the payment in one shot, in one go. In hire purchase, what happens is the payment would be made in parts. Okay? The payment would be made in parts. The number of parts, how many parts have to be made, those are mutually agreed between the vendor and the purchaser. Okay? So they would usually agree upon this between the vendor and the purchaser. In the case of sale, the ownership and the possession, it gets transferred immediately. Okay, so the ownership and the possession at the time of the transaction, the ownership and the purchaser would be transferred immediately. In the case of hire purchase, what happens is only the possession gets transferred. The ownership would remain with the seller. Sale, please remember, as soon as the transaction is completed, the ownership of the product would remain with the buyer. In the case of hire purchase, what would happen is the ownership would remain with the seller until such time the complete payment is processed. So you will have to make the complete payment. Only when you make the complete payment, that is when the ownership would get transferred. Now, in the case of a sale transaction, once the transaction has been completed, there would not be any circumstance or any right or any obligations or any option for the seller to take back the good. The seller cannot touch the good once the transaction has been completed. Now, here in the case of hire purchase, if the buyer refuses to make any of the part payments, the seller can take back the good. Now, why is it that the seller can take back the good? The seller can take back the good because the ownership of the product is still with the seller. That's the reason why he can take back the good. Now, sale, please remember, it is a method of selling a product. Hire purchase, it's a method of hiring. It is a method of renting a product. Okay, so if you notice, each of the part payment that is made by the buyer to the seller, it is more or less like a rental. Okay, it is more or less like a rental. So the transaction gets completed only when the complete payment is made. The buyer cannot terminate the transactions once it has been executed. Okay, once the transaction has been executed, there would not be any scenario, there would not be any circumstance where the transaction can be cancelled. Whereas in the case of hire purchase, before the last payment, before making the last payment, what can happen is the buyer can terminate the agreement. He can give back the product. He can say, I'm not interested in this product anymore. The sale, what happens is it is regulated by Sale of Goods Act of 1930. Hire purchase is regulated by Hire Purchase Act of 1972. Okay? So these are 6 important differences between hire purchase and sale. Okay, so the hire seller, hire vendor, or the owner is what the person, the participant who we would be calling as a seller. Then you have the hirer. So hirer is the hire purchaser or the hire buyer, the person who would buy the product from the seller, the vendor, for part payment. Then you have what is called as cash price. What is meant by cash price? Cash price refers to the actual price the buyer will have to pay to the seller if he was going for a lump sum payment. Okay? So if he were to go for a lump sum payment, what is the amount of money that he would have to buy? Basically, it is nothing but the MRP, maximum retail price. So that is what we'll be calling as the cash price. Then when you get into a hire purchase transaction, there is an important type of payment which is referred to as the down payment. So down payment refers to the payment that is made by the buyer to the seller or the hire purchaser to the hire vendor at the time of signing the agreement. So the down payment is like a token amount which is paid, and this sort of confirms what is the transaction, or that the transaction has been confirmed, or the purchaser is serious about going ahead with the transaction. Then the next terminology, what we would be learning is the hire purchase price. Hire purchase price refers to the total price that has to be paid by the purchaser, by the buyer to the vendor, if he were to buy it on hire purchase. So please remember, hire purchase price would be higher than the cash purchase price. Okay, the hire purchase price would be definitely higher than the cash purchase price, because there would be an interest component that you would have to be paid. Okay, because you will have to pay some additional amount of money along with the cash price, because you're making the payment in parts. Okay, so the hire purchase charge refers to the interest amount, the additional amount of money that would be paid by the buyer to the vendor in order to transact on hire purchase. Then there's something which is called as an installment money or a part money. This refers to the amount that you would be paying for each part, okay, which that you would be paying at regular intervals to the hire vendor. Each of those part is referred to as a part money or the installment